SoFi has just announced the schedule for its Q2 2022 earnings call. SoFi's earnings call will be on August 2, 2022 at 5 p.m. Eastern Time. There's been a lot of talk about what's going to happen in SoFi's Q2 earnings. Will they exceed expectations, or are we in for a rude awakening? How does this all affect you as an investor? We'll talk about all of that and more coming up. SoFi has been consistently growing their number of users and products for the past few quarters. Their increasing adjusted net revenue and EBITDA has also been one of the key highlights for their past earnings calls. In their Q1 2022 earnings call, SoFi spoke about their adjusted net revenue and EBITDA. SoFi is expecting an adjusted net revenue between $333 million to $340 million and an adjusted EBITDA between $5 million to $15 million for Q2 2022. But with the current market condition we have today, should we expect SoFi to report a positive quarter result? In today's video, we'll be going over 3 key factors on why SoFi could potentially report another record-breaking quarter and how this affects you as a SoFi investor. Watch until the very end, you don't want to miss any of this. We're not financial advisors and this is not financial advice, so always do your own due diligence. Also, if you haven't already, make sure to follow us on our social media pages at WealthGambit. The links will be in the description box below. Without further ado, let's get started. Key point number 1, bank charter coming into full effect. SoFi CEO Anthony Noto and SoFi CFO Chris Lapointe on multiple occasions have expressed that the full integration of SoFi Bank into SoFi's business will start in the second quarter of 2022.
Yeah, absolutely. So there are a number of key benefits to obtaining the bank charter, most notably having a lower cost of funding. So if we go back to prior to having the bank, we relied on our own equity capital on the balance sheet, plus access to warehouse lines in order to fund originations. And with those warehouse lines, we would pay anywhere between 150 basis points to 400 basis points, depending on the issuer of those warehouse lines. What having a bank allows us to do is that we're able to go out and raise deposits, still offer a really competitive interest rate to our members, but significantly lower our overall cost of capital that we're using to deploy and fund originations. So that's first and foremost one of the main benefits. The second benefit is prior to having the bank, we had access to capital, but we also had the warehouse capacity. But that's finite. What we ended up doing was we would originate loans, hold them on the balance sheet for 3 to 4 months, and then sell them because there was only a finite source of funding that we had. What a bank allows us to do is, in addition to the lower cost of capital, allow us to extend that hold period. And what we've talked about publicly is that's going to extend from 3 to 4 months hold to 6 months, which also really helps the overall unit economics of our business.
The benefits that will come along with having a bank under their business umbrella gives SoFi the edge to grow exponentially every quarter. Key point number 2, adjusted net revenue and adjusted EBITDA. At around $330 to $340 million, SoFi expects to see a 39 to 43% year-over-year growth on adjusted net revenue and a $5 to $15 million adjusted EBITDA. Hopefully, SoFi will keep its head in the game of setting its 8th consecutive quarter of positive adjusted EBITDA. Yes, you heard that right. 8 consecutive quarters of positive adjusted EBITDA. Key point number 3, SoFi consistently beats expectations. In Q1 2022, SoFi beat its own adjusted net revenue and adjusted EBITDA guidance. Their expected revenue was around $285 million, but their actual adjusted net revenue was $322 million. SoFi surpassed expectations by $37 million. The company has also reported an actual adjusted EBITDA of $9 million, which exceeded their high expectation by $4 million. SoFi's Q1 2022 result also showed a negative 15-cent loss per share. If we take a look at the bigger picture, it shows that SoFi is getting closer to hitting profitability. The current market conditions are no doubt dragging stocks like SoFi down. Experts in the stock market are expecting companies to slow down in growth, but time and time again, SoFi has proven that its business strategy can still show positive results even in the midst of a challenging environment. At the time of recording this, SoFi is moving around $7 per share, up 25% compared to what it was last month. Along with SoFi, Lending Club is also seeing the light at the end of its tunnel as it's up by more than 18% compared to last month. Upstart, on the other hand, seems to still be down about 21% compared to last month. Now, how about the SoFi short sellers? They're down by about 8% since April. Also, at the time of recording this, 42.93% of SoFi's outstanding shares are still owned by institutional investors. It's no secret that SoFi has gone through an absolute bloodbath, but when asked about how the market is responding to endless pressure and volatility, here's what SoFi CEO Anthony Noto had to say.
I'd say the demand for our products has stayed really consistent, and once people use our products, whether they're investing or they're spending with a credit card or spending through their checking savings account, it's remained consistent with what we've seen in the past. And the most important thing for us is to make sure we don't overextend ourselves in any way to capture too much of that demand. So we're looking at a vast amount of economic data to make sure that we're still green across the board.
Shout out to those who commented on our previous video. We greatly appreciate your support. A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. Shout out to Arthur Magazu, Wei Chu, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrand, Jay Bone, Daniel Zinson, and ABC Sam. Thanks for watching. We greatly appreciate it, and until next time, peace.